You all is well, and I hope you all had a good New Year's and a good Christmas. So this is the first video since we've been coming back, and I just wanted to explain why I feel like we're going into a recession, and if you bought a house in the last year or two, you could be in some trouble. So I just wanted to make this video to kind of break it down to people that don't really understand about economics and interest rates and stuff like this. So yeah, it's just a quick video to give you that understanding. So why I think that we're in a false sense of the economy and we're going into a recession now is a couple of reasons. We'll just start from the home things first, and then we'll go into the the recession side of stuff. So with that being said, let's just quickly get into the video. So I feel like in 2019, going into 2018, we was going into a recession, but the government then started to print money and just put it into the economy so we can then spend it and just basically keep this economy floating. So if you remember back in 2020, we was getting things like bounce back loans, there was grants, there was furlough schemes, there were just all different kind of schemes for the last year or two, just to kind of, you know, help the economy keep growing. And if you remember, interest rates went down to like 0.8%, but just for the sake of this video, we're just going to keep it simple and just say 1%, just so we can obviously make sense of this. So they did stuff like remove stamp duty. Again, they was putting all this money into the economy. They moved interest rates down to 1% from, I think it was like three or something like that, or 4%. Don't quote me on that. But yeah, all these kind of things are just helping the market basically thrive. So if I can, I'm going to put a chart up in a sec to basically show you in 2019, going into 2020, like where the market kind of dipped. And then as soon as they started to pull the money in, it kind of brought things back up. So again, why are you in trouble if you bought a home? Now, the reason why I say this, again, if you've not been around a real investor, yeah, a real investor that looks at economic data and stuff like that, not just buys and hopes, basically, yeah. So if you've been watching this data over the last couple of years, you've seen, obviously, like I said, interest rates went down to 1%. So what this does is it makes the money cheaper to borrow. So let's just say you wanted to borrow £1 million. Again, you could borrow £1 million to go and buy a house, whatever it is. Let's just say you're going to borrow £1 million to go and buy this property. They're going to charge you a good rate. At the time in 2020, 2021, the interest rates, like I said, it was down at 0.8, but we're going to say 1% just to make this simple for you guys, right? So the money is really, really cheap to borrow. Now, if there's anyone watching this video and you're over the ages of, just say 40, 45, 50s and stuff like that, you'll remember back a few years back, that interest rates were like 12, 13, 14%. And today we're currently sitting at around 7%. So it's a great deal. But unfortunately, for the times that we're in, it's not a great deal. So I'm going to try and make this make sense to you. So again, when they bring down the interest rate to 1%, again, it incentivizes you to go out there and spend money, borrow money, and all the rest of it, right? And then what we did, again, as investors and the people that have enrolled into our courses, and we sit down with our mortgage brokers and people like that, just to help people get the right advice when they're trying to make these kind of moves. So when we was basically in my group, and to the people, we was telling them, look, the money's really cheap to borrow. Go and get this money in it. Like, go and buy a house now. This is the time to buy. The money is so cheap, you're never ever in history gonna get it like this again. Well, I don't think in our lifetime we'll mostly see this again. Maybe in the next 2 generations or so. But yeah, I was saying to them, this is the best time to go out and borrow and buy, right? But I was a bit skeptical still, because I still feel like things were gonna break. So moving forward till today, again, before I go there, I was telling people to basically, if you own a home right now, go and remortgage your house, like remortgage now. Like, go and get out of that deal that you're in now before your interest rate creeps up on you to the 7% where it's at now. So basically, 6 months ago, when the rates were like 4% and as low as that, I was trying to tell people, if your mortgage payment is about, I mean, if your mortgage is about to run out in the next, let's just say, couple of months, lock it in now, innit? Like, take the extra penalty if they're gonna give you a penalty. It's gonna save you a lot now, and so do it now, right? And a lot of people did it. Again, I put this information out on social media. Whoever saw the information, if they act upon it, good luck to you. You're in a good place now. So for the people that have been buying up to the houses to the 7%, it is now starting to slow down the market, right? So this is why I say if you bought a house, you're going to be in trouble. So let me explain it to you in a bit more depth. If you remember, let's just say a year ago, if you was trying to buy a house, you was in a bidding war with a next buyer, and 9 times out of 10, you was getting outbidded by 20, 30 grand, right? Now, if you fast forward this now, that was when interest rate was like 1, 2, 3%. It's a good time to buy, right? Now, if you've noticed, if you've been trying to buy a house in the last 6 months, you start to realize how you've not really been into like a bidding war, because again, supply and demand. At the time when it was 1%, there was few houses on the market because everyone saw it as a cheap opportunity to go out and buy. Now that it's at 7%, no one doesn't want these houses anymore. It's a very few people that are not really educated about the situation, and they're mostly just seeing their friend buying a house and they're getting excited, not knowing what's coming ahead and thinking I should buy a house too. And then now you basically double doomed yourself because, again, you followed someone's wrong advice. So again, if you've not enrolled in our Ruby 8 investment education platform where we can show you how to do this the right way, the safe way and secure, then again, I think you're going to be into trouble. So moving forward, we're at 7% now. The demand for these houses are starting to slow down. So anybody, like I said before, sorry if I keep repeating myself, but I'm trying to stress so you understand this. No one ain't really going to buy a house now. So if you're about to, if your mortgage is about to run out, you're going to be you're going to be paying a lot more in interest payments. Well, not just in interest payment, just payments in general. So yeah, I feel it's going to be some rocky times. And with gas and electric and utilities and stuff like going up, this is the last thing that we need to be paying extra towards. So if you listen to the advice that we was giving out, you probably saved yourself a lot of money and you can sleep at night a lot better, because again, we was trying to tell people to go out, get a fixed rate of 5 years, 6, 8, 10, the longest possible, you know, at the cheaper rate. Don't get it now. So yeah, so that's why I would have said, if you kind of brought a house, because again, in recessions, there ain't that much money going into the system. So again, supply and demand, the demand's going to go down and the supply is going to go up. And yeah, it's just going to cause houses prices to go down, because people are going to have to pick of the bunch and they don't have to take this house if they don't want to. So I basically want to move forward onto some data that came out from the Federal Reserve Bank of St. Lucia. Now, this was brought to my attention on the 5th of January. Now, this document was leaked out, it was published by the government Fed on December the 28th, 2022. Now, you got to look in hindsight, because we are now in January the 6th, right? So, how does all this make sense? Why do I think that we're going into a recession? Because these people now have officially just come out and just stated it. So, Mr. Kevin, I'm basically going to read what he has said. He said, our state economists conditions a harboring of a national recession. So they're coming out, they're telling you now, innit, right? But they also won't put this on mainstream news, but they're coming out and telling you. Why they're telling us now, I don't know. But it basically says, our economics view a recession as a national event. However, past recessions have shown that some states' economies continue to expand during a recession. What does this mean? They're basically saying to you is not all states are gonna go into a recession when we go into a recession, right? So they then go on to, it's basically they basically, how did they get this data, right? So basically the Federal Reserve Bank, they've got this they measure it by obviously the GDP, right, for starters. And they use this metric called the CSI. Obviously, I'm going to put all these documents on the screen so you can see them as well and have a look for yourself. But they've got this CSI metric, and they're basically saying when it goes over the 25 state, that's basically indicating that we're in a recession or we're going into a recession, right? So I'm going to show you again all this kind of stuff on the screen in a second. But basically there's some more data that basically breaks down the recessions and the states in it, so you can kind of gather when we're going into a recession. So in 1980 there was 30 states. In August 1981 there was 30 states. In August 1990 there was 26 states. In April 2001 there was 24 states. In January, which everyone remembers that's recession, 2008, there was 9 states, right? But if you see in this document, at the bottom it says, basically, to break it down in a nutshell, again, if you remember, 2008, they just didn't have a clue with all the numbers. Everything, all the data was just wrong, basically. So they couldn't, that's why it just hit us in a panic, basically, because we just didn't have the right data behind us to kind of give it to us, so we knew that this was going to happen, right? So this is why in 2008 the banks were just borrowing us money like mad, and yeah, everything just went kaboom. So again, I'm going to put this chart up on the screen so you can now see when we've gone into a recession, and every time it flags up. So again, in a recession, house prices will go down as well. So again, let's look at this chart. It says in 1980, as you can see, it's gone above that you can see that line that goes in the middle. It says 20, that's the 25 state. Remember what I was saying, when it goes above that 25 state mark, that's the indicator to say that we're going into a recession. So if you look on this chart, in 1980s we hit a recession. In 1983, 82 and 83 we hit a recession. Then in 1991 we hit another recession. And then in 2001, 2002, we hit another recession. And we all remember the recession in 2009 and 2008 kind of times, isn't it? So now, if you look right to the end where it says 2021, remember, like I told you, this data is a little behind, isn't it? This document was printed out in 2022 in December. So we are now in January. So that means that if this data is a little far behind, I am assuming that where it says the 25 states at the 2021, remember we're in 2022, 23, yeah? This data is mostly going to be a lot higher. So I reckon it says now that we're above 25 states. I think we're mostly at the 30 state mark. So that's the clear indicator that we are going into a recession. So I hope that video was entertaining for you and broke it down and kind of just made a bit more sense of this stuff. Why this data is good as well, because we use this for when we're trading and stuff like that as well, because these things can move the market up or down. So again, I'm not going to hold your time for too long. I hope you are all well, and God bless you all. Take care.